Stocks treaded water today as the Fed held rates steady. As expected, what was not expected was the Fed was a little bit more hawkish going forward and really bringing the expectation for rate cuts for the rest of the year down a notch. Copper surge was really the only outlier to the upside. Volatility dropped despite the fact that the market didn't really rally too much. Under the surface, small caps really grabbed the baton. So watch today's full trade setup and technical breakdown. With the full video at marketscholars.com. You can see the link in the description and the comment down below. All right, so the top story of the day was the Fed. The Fed held rates. They kept rates at the same level as expected. The question is whether or not they're going to keep rates going forward at the same level. As you can see here, the expectations for rate cuts for July are pretty much nil, right? Over 91% chance that they're not going to cut rates. They start to pick up in September. There is a 64% chance they'll cut rates in September, and that's from a week ago. That's actually that's a lower number. So the odds of rate cuts going out into December are much lower. You can see it's still about a 95% chance we'll at least get one, and that's been pretty consistent. But these other numbers are starting to get bigger over here, which means we're getting less likely that we're getting cuts. And you see that showing up. You don't necessarily see it in the 3-month, which has been flat as a pancake because the Fed's not doing anything. But you're starting to see a little bit in the 2-year, the 2-year dropping down, coming off of its levels where it was up above 4%. I don't know why it's showing me that now, but it was above 4% there, and now it's been kind of pulling back. The other interesting factor today, besides the S&P, you can see the S&P ended up coming down a little bit, but besides that was the fact that the VIX also came down. So the S&P was down just barely, but the VIX also dropped throughout the day. In fact, if I were to show the daily chart here, you can see that drop there. That was not expected, right? With the Qs and the S&P falling. As soon as the press conference was over, you would have expected a jump in volatility, and that wasn't necessarily the case. So with the Fed holding firm and volatility dropping kind of unexpectedly, what's the market really telling us here beneath the surface? Before we answer that question, help us grow the Market Outlook video by giving us a like, a comment, and a share down below with fellow traders, and don't forget to subscribe so you never miss a Market Outlook update. All right, today's key theme was really about what's happening beneath the surface. With the S&P 500, as you can see here, moving, the NASDAQ just moving, barely moving at all, and a little bit of volatility after hours, but you can see an inside day today. We did see a little bit of evidence of selective risk-on behavior. As mentioned previously, the VIX dropped nearly 7%, despite the fact that the S&P closed at the lows of the day. But if you take a look at the Russell 2000, the small cap index was up more than 0.5%. Again, came off of its highs, but still finishing it back above its 17-day moving average. So a little bit of rotation into an area of the market, these smaller domestic names that often signals a little bit of quiet accumulation. We also saw a pretty decent jump in copper, rallying up over 1.3% down in the futures so far here going into Friday morning. Both copper rallying, that's a classic intermarket sign that traders are betting on cyclical strength, right? So, again, this is the metal that has more industrial use, more so than, say, like gold, for example, which did not rally and actually fell yesterday or Wednesday, but as the Fed held rates steady, and then now is down a little bit more going into Friday morning's open with the futures. So despite a flat headline close, the market shows us that money is moving. It's not exiting. It's just moving into other areas where we just kind of gestate a little bit. So what comes next? With volatility falling and copper and small cap stocks rallying, some kind of niche elements of the markets, the pressure now shifts back to tech and mega caps, which have been, you can see, really good 3-month returns. Can they reassert their leadership going into the end of this week and next week? Or will we continue to see this quiet rotation into other cyclical and domestic names, which typically don't necessarily correlate with risk appetite? The bond market is calm, but of course we're watching yields closely. Here we go. Bring that chart up here. Any sudden spike up above this 4.5% range, especially on the 10-year, could test the fragile bullish footing that we still have, right? This strong, long bullish momentum that we have that's starting to fade. And speaking of strength, today's trade idea taps into one stock that just broke above its 200-day moving average with strong momentum, breakout volume, and a textbook volatility expansion setup. I'll walk you through that in our full market outlook video. Get the full market outlook video with today's technical charts, macro commentary, and our featured trade idea exclusively for Foundation members and higher at marketscholars.com. It's just $29 a month, less than $1.40 per video for daily trade setups, educational insights, and full access to our Market Outlook Live, where we manage current trades in real time, as well as put on today's trade before the market closes. So sign up now down below in the description or in the pinned comment below to get tomorrow's trade before the market closes and see how we manage those open positions and never miss a Market Outlook video in the future.